Welcome back. You're still tuned into Halftime Report, and this is our What's Trending segment. And what is trending other than the expectations ahead of budget? And that is what we'll be discussing on this segment. On the indirect tax side, of course, the focus remains on tariff rationalization, correcting duty inversions, and easing compliance through digitization. On direct taxes, expectations on the implementation of the new income tax regime, TDS rationalization, and around demands around capital gains and dividend taxation as well. To break down what's likely, what's aspirational, and what really matters for businesses and investors, we are now joined by Himanshu Sinha, partner taxation at Trilegal, and Uday Pimprikar, who's partner and indirect tax leader at EY India. Uday and Himanshu, thank you so much for joining in. Even in the economic survey yesterday, the main points was how to attract more FPI flows now. And the second was Make in India. That was the big talking point. So the questions are from that angle. On the direct tax side, do you think there'll be some measures to attract more FPI flows in the country? And from the indirect tax side, do you think there'll be customs duty rationalization? Himanshu, let me begin with you. Then Uday, you please come in on this.
Yeah, thank you for having me. So on this aspect of the emphasis of the government on inflow of investments, I think the government's focus more is on FDI rather than FPI, because government's priorities lie more on the side of employment generation rather than capital inflows, because government feels that the domestic retail investors are pumping in sufficient amount of money to offset the exit of FII money out of the Indian capital market. So I would say it's a low priority item in my view, and the higher priority item is to promote growth and generation of employment, especially in strategic sectors. So there might be some incentives which people are expecting, and there might be government announcements to that extent, whether in the form of tax holidays for entities which are other than eligible startups, or additional depreciation for investments in order to promote capital expansion and employment generation. So some kind of tax incentive, either by way of additional depreciation or some kind of tax credit or some kind of extension of tax holiday may come about.
Uday, coming on this, what's your take on the Make in India conversation that has been happening around now? Any rationalization is what we're expecting?
So I look at it slightly differently, Somin. The budget now, from an indirect tax perspective, is primarily kind of focused on customs and, of course, an avenue to kind of implement GST decisions. But from a policy perspective on the customs side, at a generic level, they have kind of gone about building a journey which they have kept to it or been consistent with. So this journey of tariff rationalization started about 3-4 years back. They've done a lot of work. They made some legislative changes about 3-4 years back, whereby they looked at all the exemptions over the last few years. About 450 to 500 exemptions have been kind of amended, reduced, all of that has happened. And over the last couple of years, they have been kind of looking at simplifying the tariff structure. And the primary drivers for customs bit is to, as you rightly kind of pointed out, Make in India, removing inversion, making India investment friendly, handling kind of procedural and those kind of things on the customs end. And so is the case, I think, to my mind, on the GST. And this is a market departure from what was there earlier, where customs used to be looked at as one of the avenues to increase revenues. It's no longer so. Okay, the average rate, the overall number of tariffs have actually come down from 21 to 8 in 3 years. And we would expect some bit of that to continue. And also the fact that the rates have been kind of moved primarily to align with the PLI and other kind of factors and incentive mechanisms that have been given by the government. And that particular journey, to my mind, will continue and be consistent with.
All right.
As we go along.
All right. Himanshu, just wanted to get down to what the equity markets are possibly vying for at this point in time. What is the expectation, or what is the, in terms of the expectation, do you think that there could be any kind of tweaking when it comes to LTCG, dividend, buyback tax at all, STT?
I think that these aspects have been part of the wish list by the stakeholders, in the equity market. But I would say it would be very optimistic, overly optimistic, that the government would oblige and give further benefits, given the background that past year the government had announced major tax relief for individual taxpayers. Across the board, we all know that up to 12.75 lakhs salary taxpayers were sort of exempted completely. And then we had a GST tax rates rationalization, which has led to significant amount of increase of purchasing power in the hands of the individual households. So given that backdrop, I'm not too optimistic. Of course, it's part of the wish list. I'm not too optimistic on any kind of LTCG relaxation or dividend taxation relaxation or STT sort of rationalization, etc.
Uday, I just want to ask on a couple of points. Litigation, compliance, those have remained a bit of a pain point when you talk about indirect taxes, right? So how significant maybe during this digitalization of customs litigation process could be, and is it the right time for such procedural reforms to come in now?
So there are two aspects on the litigation front. One aspect is the litigation quantum itself. Okay. And there was a Rajya Sabha and an answer to the Rajya Sabha question that came about 6 months back. And that indicated a couple of things. One is that the customs litigation is actually, in terms of number of, let's say, appeals or whatever, has kind of gone up by 20% over the last year. But the overall value of litigation has actually gone up by about 70-80%. So as per that particular answer, 95 to 95,000 crore of litigation is pending at on the customs end. And so the ask of the industry, and I think we might see some kind of action on that, is on getting some kind of a dispute resolution scheme, or to kind of reduce the quantum of these disputes. And what if that happens, then any dispute which is not related to pure smuggling or narcotics could be kind of open for getting settled, and some scheme coming up there. And there is a definite need for that. So that is one aspect on the litigation. The second aspect on litigation is this entire administration of managing this particular litigation piece, which is not only relevant for customs, but also for the other taxes in general. But on the customs side, they are definitely looking at making things easier by getting the entire customs administration on a platform, the way we have in GST, and implementing it. To start off with, they will kind of look at getting some kind of API functionalities for doing day-to-day kind of compliances, such as filing of bill of entries and so on and so forth. That should happen. But over the next 6 to 9 months, or maybe about a year, they would want to kind of onboard the entire administration on compliance, on the rest of it. Already faceless assessments is kind of happening. And I think this will just, as an activity, move ahead.
Okay, Uday, it's an interesting conversation, and there's been a lot around customs on different social media platforms as well. But we have to cut across to another panel that is happening on budget. So thank you, Himanshu and Uday, for joining in. Let's cut across to another interesting panel.